everybody. Welcome to today's fundamentals. Hello, Peter.
Hello.
A new week, a new start. How's the USD been moving?
Well, overall, we saw the US dollar weakening a little bit during Friday's late American session. I would be noting that, from the US financial releases, we had some positive signals about the industrial sector, which, slowed down, but did not slow down as much as they were expected to. So the overall picture was better than expected. The worrying part came from the demand side, as the University of Michigan consumer sentiment came in lower than expected, which was already expected to drop anyways. And that tended to imply that the average US consumer has become a little bit more pessimistic.
And how about US stock markets?
Also, US stock markets tended to edge a little bit lower. We had all three major US stock market indexes, that would be the Dow Jones, S&P 500, and NASDAQ being in the reds. I would expect that should the market sentiment become a little bit more cautious, we may see them dropping a little bit further today.
And back in the FX market, what's on the calendar for today?
For today, I would be highlighting three events. The first would be the Canadian financial releases, which are due out in the American session. We get the house starts, the number of house starts for August, and it's expected to rise a little bit. Could provide some support for the Canadian dollar. On the flip side, I would be also noting the producer prices growth rate. It's also for August. Now, should that be on the rise, should it accelerate, we may see the loonie getting some additional support. That's one. The second element would be practically for oil traders. We have Saudi Arabia Energy Minister Abdulaziz Al-Salman, which he'll be speaking in Canada today, the American session. And I wouldn't be surprised to see the Saudi Energy Minister actually maintaining the stance that the country will be maintaining a low production level for oil, which could push oil prices higher. And the third element would be during tomorrow's Asian session. We're getting from Australia RBA September meeting minutes. Should the tone in the document start sounding a little bit more on the dovish side, and that the bank has reached its terminal rate and is not going to be proceeding with any more rate hikes, that could weaken the Aussie somewhat during tomorrow's Asian session.
And how about the rest of the week?
Well, definitely we highlight a number of monetary policy interest rate decisions. We make a start with the most high-profile one, that would be the Fed's on Wednesday. The bank is expected widely to remain on hold. And it's characteristic that Fed funds futures imply probability of around 99% for such a scenario to materialize. It's as the market has almost fully priced in such a scenario. Nevertheless, I would be noting here that we still have inflationary pressures in the US economy, which tend to remain persistent. And the CPI rates are still above the bank's 2% target. So we may see the bank remaining on hold, yet keeping a hawkish tone in the accompanying statement, maybe even in Fed Chairman Powell's press conference later on, which could provide some support for the USD. Should, on the other hand, the bank imply that it has reached its terminal rate and is done with hiking, that could weaken the US dollar. The second interest rate decision of interest, I think, would be BOE, Bank of England. That's on Thursday. Now, the bank is expected to hike rates by 25 basis points. Inflation is quite high, and I would expect the bank to maintain also a hawkish tone in its accompanying statement. Anything less than a hike plus the hawkish tone could weaken the pound substantially. While on the other hand, should the bank proceed as expected, we may see the pound getting some support. And to end the interest rate decision cycle, I would be also noting from Japan, BOJ's interest rate decision. That would be on Friday's Asian session. We expect the bank to remain on hold. That's not the question here. BOJ is widely expected to remain at minus 0.10%. The big question is whether the bank will be signaling a shift in its ultra-loose monetary policy stance. And should that be the case, given also BOJ Governor Weather's comments last week, that could provide some substantial support for the JPY, asymmetric support. Otherwise, the interest rate decision could weigh on the Japanese yen. And we finish with financial releases. Definitely, I would be highlighting Canada CPI rates, UK CPI rates, the retail sales of the UK and Canada. I think, though, the highlight of the week is expected to be the preliminary PMI figures. They're for August, they're on Friday, and we're getting the figures of Australia, Japan, France, Germany, the Eurozone as a whole, the UK and the US. Our attention focuses primarily on Germany's manufacturing sector. The German manufacturing sector has reported a substantial contraction of economic activity in the past month, which was very worrisome for Eurozone's economic outlook. Should that be the case also in the September preliminary reading, that could more or less highlight the risks ahead for Eurozone's outlook and could weigh on the common currency.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis.
So welcome to the technical analysis part of the presentation for today. My name is Peter Yusuf, Senior Market Analyst at IronFX. In front of your screens, you have the US dollar index. It's the 4-hour chart. All charts to be presented are to be of the same time frame unless otherwise stated. Now we see that the US dollar has maintained its upward trajectory. And to make the situation a little bit more clear, please allow me to drill out of the 4-hour chart into the daily chart. And to do that, here you go. You can see a nice upward trend line guiding the index higher. And practically it was about to test the 105.50 resistance line. We expect, let's drill back to the 4-hour chart. We expect the upward motion to be maintained and the index to possibly break the R105.50 resistance line. The RSI indicator, though, is telling a different story. Okay, it's still pretty high. We should note that. And it's currently at 59.6.7. But it seems that the bullish sentiment is slowly fading away. So we may be talking for the time being for a correction lower. Should the bulls maintain control over the US dollar index, I would expect it to break the 105.50, which practically is, over the past 48 hours, a barrier which kept USD bulls at bay. And should the R1 be broken, the next possible level noted would be the 107 resistance level. On the other hand, should the index remain on a sideways motion, we may see it remaining between the R100 and 550 and the S100 and 440, a level which was duly tested back here at the beginning of the month, while possibly the index is going to be breaking the upward trend line guiding it. Once again, more or less highlighting on a technical level, signaling, if you prefer, the interruption of the upward movement. For bearish outlook, I would require the index not only to break the upward trend line, but also to break clearly the S100 and 440 and start actively aiming for the S203 support line, a level which provided support here and here. For the time being, we tend to maintain a bullish outlook, given also that we have the Bollinger Bands moving upwards, the 100 and the 200 moving averages also pointing upwards. On the other hand, once again, small warning, the possibility of a stabilization seems to be looming. Let's move now to Euro USD. We should see a reverse picture. We actually do. Allow me to reposition the labels. There you go. Locking everything in. Drilling out to the daily chart. And I think now it's clear that all of that is not required. I would like to delete all the past trend lines in order to clear the path and draw a new one. Starting from here, moving here. Back to the forward chart. Small adjustment. Becomes pretty obvious that we have a clear downward trend line guiding the pair, yet there are some signs of stabilization. In the short term, it's characteristic how the pair is currently over the past 48 hours, 2 trading sessions, it's practically rotating and constantly testing the 1.0670. It's currently just slightly above it. The bearish sentiment is still there, but it's not as strong as it used to be over the past 3 days. It's characteristically that the RSI indicator has been rising after hitting on the reading of 30 and is now nearing the reading of 50, which may imply a rather indecisive market and in turn could allow the sideways motion to be maintained. For a bullish outlook, I would require the pair to rise, break the R1 1.0770, possibly break also the pre-mentioned downward trend line, signaling the interruption of the downward movement, starting to aim, if not test, the R2 1.0865. On the other hand, should the bears take over, we may see the price action dropping below the 1.0670 definitely, clearly this time. And I would require also a break of the S2 1.0580. We're talking about a distance of around 90 pips here, which is quite possible within a day for the Euro USD. Please note the distance here, which was over 90 pips. Let's have a look at GBP USD. And let's drill out to the daily chart. And at this point, I would be noting also an intensification of the bearish movement. You can see it right here with the second downward trend line. See how the RSI indicator is flat at the reading of 30, implying for the daily chart a strong bearish sentiment. Let's drill out to the 4-hour chart. Yep, the situation becomes even more clear here. Allow me to also add a couple of toolbars. And let's zoom out a little bit. That's better. Now the price action has dropped over the past 48 hours, broken the 1.2445 support line, now turned to resistance. So that has to be turned into red, exactly to signal that its rule has been reversed. Not the label. Let's go hunting for a new ultimate support line, a new S3. I would be noting this true here, a little bit higher. Here there has been some false breaks, but note that this level is also active as a resistance line, used to be. So yes, I'm going to be keeping that as the S3 in green. 1.2045. Let's readjust the chart. It's a little bit asymmetric, I know it. Let's correct the labels as well. Now BOE is going to be a pair which is going to be closely watched by traders, at least until BOE's interest rate decision on Thursday. But let's not forget that we have also the preliminary PMI figures of the UK on Friday's European session, as well as UK's retail sales growth rates, which are going to be interesting as well. So I do expect some increased interest from pound traders in this week. Let's not forget that we're getting also on Wednesday UK CPI rates. So we have on Wednesday, on Thursday, and on Friday important financial releases and monetary policy events, which could shake the pound and provide additional volatility for cable. Okay, we have everything locked in now. Let's talk about direction. Two elements tend to highlight the possibility of a bearish direction for the pair. The first is definitely the downward trend line, which has intensified, or if you preferred, steepened its downward slope since around the 1st of September. The second element would be the RSI indicator, which continues to run just above the reading of 30, implying a strong bearish sentiment, which could drive the pair lower. Now, should the bears maintain control over cable, I would expect it to break the S1 1.2310 and start aiming for the S2 1.22. On the other hand, should the pair stabilize, I wouldn't be surprised to see cable rise possibly break the pre-mentioned downward trend line and stabilizing around the R1 1.2445, and that may take the form of revolving around the R1 as an axis. And for a bullish outlook, the prerequisites are far higher. We expect for a bullish outlook the pair to rise, break the initial downward trend line mentioned, break the R1 1.2445, but in this case I would require the pair to also break the R2 1.2535, but also the downward trend line which was initiated several months ago. Nothing less. Possible correction higher up until the R2 could still go downwards in my opinion. Okay, let's have a look at USD/JPY. Zooming out, a nice sideways motion where the pair was testing the R147.80, yet remained below it. So we tend to maintain our bias for the sideways motion to continue between the 147.80 and the 146.10, a level to the downside which was tested here. But overall, given the sideways motion which remained close to the R1, we tend to maintain the view that the pair is not going to be deviating much. Also note how practically the 20 moving average, the 100 moving average, was it the 50? Sorry, the 50 moving average and the 100 moving average in orange are remaining very close by, implying a flattening out. The RSI indicator is dropping, nearing the reading of 50, also implying a rather indecisive market, which may allow the sideways motion to be maintained. Should the bulls take over, we may see the price action of USD/JPY rising, breaking the R147.80 and start aiming for the R249.40. On the flip side, should the bears take over, we may see the price action dropping, breaking the S146.10 and start aiming for the S243.70. Let's have a look at AUD/USD. Let's readjust the levels a little bit. Now, Aussie traders, we have mentioned that are expected to keep a close eye on the release of RBA September meeting minutes. And I would expect that should the document show a dovish tone or an unwillingness on behalf of the bank to actually proceed with more rate hikes, that could weaken the Aussie. However, I would be highlighting a key event here. I would be highlighting the change of guard in the leadership of the bank, where practically former Governor Philip Lowe has stepped down, and now Deputy Governor Bullock has taken over. I wouldn't be so certain about the bank's stance. We may see Michelle Bullock actually adopting a more hawkish stance. And should that be the case, we may see the Aussie getting some support. Or if you prefer, should that scenario be more evident in the document, we may see the Aussie getting some support. On the other hand, should Michelle Bullock more or less succumb also to the political pressure or view that the cumulative impact of the rate hikes the bank had delivered up until now will be enough to actually curb inflationary pressures. And should that be also reflected in the document, we may see AUD weakening against the US dollar, but not only against the US dollar. I would also be highlighting definitely the sentiment around China. There have been some slight signals that the situation, the industrial sector of China is improving, and that was a positive. However, it was not as convincing. Market risks are still present and tend to weigh on risky assets, especially against the Aussie, given that the Australian economy is closely linked to the Chinese economy. Now, once again, we tend to highlight the possibility of a sideways motion to be maintained between the 0.6510 and the 0.6380. We're talking about a distance of around 130 pips. It's a corridor which tends to enclose the price action. I highlight how closely the 20, 50, and 100 moving averages are moving and how the Bollinger Bands have narrowed, exactly highlighting low volatility. The RSI indicator is constantly bouncing and running along the reading of 50, implying rather indecisive market. So all of that tend to suggest the continuation of the sideways motion between the R1 and the S1. For a bullish outlook, I would require a clear break of the R1, 0.6510, and the price action to start aiming for the R2, which is the 0.6610. Please note how in the early days of August, that level practically provided resistance in the pair's past sideways motion. On the other hand, should the bears take over, we may see the price action of AUD USD dropping, breaking the S1 0.6380, and start aiming for the S2 0.6285. Once again, I'm highlighting, despite some false breaks here, the strength of the S1. I would also be adding here that we had a comment from the research department. Please allow me. Now, the research department tends to highlight the existence of an upward trend line, which goes like this. Give me a sec. Seems to be pretty fair, a little bit shifted to the right. Okay. So this loop is not so intense. Okay, that's it. In my opinion, not. Yes and no in this following sense. On the one hand, you have an upward trend line, but okay, you had 1, 2, 3 consecutive higher peaks and 1, 2, 3 consecutive higher lows. For the trend line to be valid to the upwards, we would require practically a higher peak than this one. So the price action has to reach up until the R1 0.6510, which for the time being seems to be a little bit unlikely, given that the RSI indicator remains near the reading of 50. I expect that the pair will remain in a sideways motion between the R1 and the S1. Should the bulls take over, once again, we may see it breaking the R1 and start aiming for the R2. We had another comment, give me a second. Hello to Carl and hello to Ibsen as well. Let's now move to USD CAD. Zooming out a little bit, that's better. Okay, let's place some labels here. And let's talk direction. Definitely this downward trend line has been broken. That seems to be clear. Let's place also some labels here. Starting with the R3 at 1.3775, red. The R2 at 1.3690. The R1 at 1.36. Let's move now to the support lines, starting with the S1 at 1.35. Let's color this in green. S2 1.3430. And now the S3 at 1.3320. Now I'm going to be highlighting a couple of elements here. It seems as if the downward motion of USD-CAD has been interrupted, and that was more evident from the breaking of the downward trend line, which has been guiding the pair since around the 9th of September. On the other hand, though, the pair has been testing once again to the downside the S1 1.35, yet the support line seems to be holding its ground. So unless the price action of USD-CAD actually breaks below the S1 1.35 and forms a lower trough than this one, I tend to maintain a sideways motion bias. But I would also be highlighting that we have an RSI indicator which is dropping, and it has reached the reading of 38.10, implying that a bearish sentiment seems to be building up, which may reinforce the idea of a bearish outlook here. Once again, though, for a clear-cut bearish outlook, I would require practically a lower trough than this, so the S1 1.35 has to be clearly broken. The price action has to start aiming for the 1.3430. That would allow us practically to shift the downward trend line to the right and allow the price action to pass beneath it. On the other hand, should the S1 1.35 actually be able to hold its ground and provide substantial support, then we may see an inverse W formation, which would be practically pushing then the price action higher towards the R1 1.36. Yet for a bullish outlook, I would require the price action to break above the 1.36 and start aiming for the 1.3690. It's a very, very interesting chart. Note how the moving averages, the Bollinger Bands, the 50 moving average and the 100 moving average, even the 100 moving average has started to shift to the downside, implying a bearish outlook. Very, very interesting. Let's have a look at gold. Oh, you know what? Let's have a look at WTI. Because we saw the Canadian dollar, definitely the Canadian dollar is going to be affected by the CPI rates tomorrow, and we may see also the release of BOC's September deliberations providing a hit. Let's have a look at the other fundamental factor which is affecting the loonie, and that's oil. Given that Canada is a major oil producing economy, allow me to drill into WTI, which continues to be on the rise. Let's drill to the daily chart. Oh yeah. Let's readjust this. That's it. Back to the forward chart. Practically it has been on the upside since the 24th of August, almost a month now. 3 weeks definitely. Back to the forward chart. Now we see that the price action is exactly at the R290.40. I'm widening a little bit the resistance lines. So allow me to start hunting for a new ultimate R3. We have a couple of peaks here which are quite interesting. 1, 2. But they're pretty close to the price action as such. I don't care, I'm going to be keeping them on this one. Okay, let's readjust the chart. Let's widen it a little bit. Let's go all the way. At 95.50. Nice touches. Okay, let's lock it in. Let's place the labels, starting with the trading instrument. Moving now to the resistance line, starting with the R3 at 95.50 in red. Second resistance line at 92.85. First resistance line at 90.40. Which is about to be broken. First support line at 86.85, 86.90. Could go even a little bit higher. See these peaks here? Very characteristic. 87.5. The second support line could also go a little bit higher to match this peak here. And that would be in green, the 84.30. And last but not least, I would be also raising the S3 at this peak here. And that would be the 81.5. That's it. So for the time being, we tend to maintain a bullish outlook. Expect the R1 90.40 to be clearly broken, and the price action to start approaching, if not even breaching, the 92.85. Should the price action of oil be bullish in the coming 48 hours, I would expect also the CAD to get some support against the US dollar. That should sum it up. From all of us here at IronFX, best wishes for solid trading.
Hello, my name is Christina. When you're about to begin trading, the best thing to do is start small. Choose only a couple of trading instruments. Familiarize yourself with their past price action and make sure that you perform technical analysis on multiple time frames. Also, familiarize yourself with their fundamentals. For example, if you're about to trade Amazon, have a good look at what the latest developments are for the company, but also what events lay ahead that could affect the share's price. Your aim is to eliminate the surprise factor as much as you can. You don't have to risk a high amount. Keep the risk minimized by investing low, and initially don't forget to set up a stop-loss order and a profit-taking level. Your aim should be to learn and familiarize yourself with trading, but at the same time to preserve or even increase your capital. Thank you for watching.
Hi everyone, welcome to today's webinar. So for today's session, we're going to be talking about divergence trading. In the meantime, we're going to give a couple more minutes to let more people join the session before we get started. So give about maybe 2 to 3 more minutes. So in the meantime, let me know in the chat if you can hear me and see me clearly as well. And you can see the slides. Yeah. And feel free to get yourselves a drink, make yourselves comfortable, and I will see you guys in about 2 more minutes. If at the end of the webinar we have time, we probably will have time after we're done with the slides. So let me know in the chat as well if there are any setups you'd like to see. We'll definitely have time to go through a couple of them after we're done with the slides. And then we can take a look at some live analysis of implementing divergence trading as well. So feel free to let me know in the chat if there are any specific currencies or commodities or indexes that you'd like to see. Okay, let's go ahead and get right into it. So first things first, as per usual, a disclaimer. Our products are traded on margin and carry a high level of risk, and it's possible to lose all of your capital. These products may or may not be suitable for everyone, and you should ensure that you understand the risks involved. Disclaimer: the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. The material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. Okay, I am Melanie and I will be your speaker for today. I'm an investment analyst from Everest Fortune Group who are finalists for Best FX and Equity Research in the years 2019, 2020, and 2021. Okay, so here's our agenda for today. Firstly, we'll go through what exactly is divergence in trading, and then what indicators you can use, and then we'll go through a couple of these indicators, so stochastic, RSI, MACD, divergences, so on and so forth. And then we'll go through the different types of divergences, such as normal, hidden, and exaggerated, and then we'll combine them together for high probability setups. So if you see me looking towards this side for a lot of the webinars, because I have another screen here, but let me know in the chat as well throughout the webinar if you have any questions. I'll also be keeping an eye out on the chat. Okay, let's go ahead and get started. So divergence in trading is a technical analysis concept that compares the movement of a security's price and an indicator, such as an oscillator, to identify potential trend changes. Can you guys hear me? Testing. Okay. Because it doesn't show that my audio is being recorded. Okay, but no worries, let's go ahead and continue. Sorry about that. Okay, so there are two main types of divergences. We have bullish as well as bearish divergence. And I've included a chart here for you guys to see the different types of divergences. But basically a bullish divergence occurs when the security's price makes a lower low, while the indicator makes a higher low. So this suggests that the downward momentum of the security is losing strength and the potential upward trend may emerge. So on the other hand, we have bearish divergence. So that occurs when the security's price makes a higher high, while the indicator makes a lower high. So this suggests that the upward momentum of the security is losing strength and a potential downward trend may emerge. So it's important to note that divergence is a potential early warning sign of a trend change, but not a guarantee. So traders will often use other technical analysis tools to support the divergence signals. So these can include trend lines, chart patterns, so on and so forth to confirm the divergence signal and make trading decisions. So we'll take a look at a couple of examples. Firstly, in this example, we have price making a higher high, slightly higher high on our price chart. And then on our RSI, in this example, we are using RSI, it's making a lower high. So you can see price is showing us a descending trend line, whereas on our price chart, it's giving us a increasing trend line. So first point, price is testing a key horizontal resistance level with price making a small high, resulting in bearish divergence with RSI. Since on point number 2, our descending resistance line on RSI caught the past two reversals correctly. So it forecasts that we could be seeing a reversal here. So this is exactly what happened after that. Immediately after we've identified the bearish divergence, we can see how price reverses strongly off of the horizontal resistance, RSI resistance, and the bearish divergence. You can see this is what happened on the RSI as well. In our second example, once again, we have a bearish divergence, but in this case, it's quite small. So bearish divergences can be significant, like the one we saw earlier, where it's a whole resistance level, whereas but there are also cases where bearish divergences can occur as just a small increase or a smaller high or a smaller low on the stochastic or RSI charts. So in this case, we're using a stochastic oscillator, and it's made a lower high in this case, whereas on price, it's made a higher high. So you can see after that, after we identified that, price continued moving together, and then we saw this repeated pattern here, where price is making a lower high. Once again, price makes a higher high on our price chart, whereas stochastic makes a lower high. This is also what we call a hidden resistance level, since there are two swing highs that line up nicely at this 94.98 level. Okay, so once you've identified that, then you can expect price to reverse off, since given our RSI, it is the same resistance level. But on our price chart, on our price chart, you can see how price has increased. This is telling us that price is likely to continue to drop after this point. And you see that's exactly what happened immediately after this section here. Okay, next we're going to take a look at divergence potential. In this case, we're using an RSI instead. So if we take a look at the price chart, first point is that we always want to take note of where the bearish divergence starts, as this is the level where it tends to reverse to. So we have price making a higher high on price chart, and on our RSI, it's making a lower high. So this is obviously a bearish divergence, and you can see we highlighted this starting point or the starting area because we're expecting price to reverse off of this area after we identified this bearish divergence. And that's exactly what it did. It reversed off and it retraced back to this level here. So this is combination of what we call a pullback, in this case, a pullback support, because we're expecting price to price has broken out of this resistance. It's broken out of this resistance and it's retracing back, and it has bounced off of this level. So it now becomes an overlap support level. So if you were here for our support and resistance series, this is just a recap for you. But if not, no worries. That's just a brief summary of what is happening here. Okay, so next we have forecasting breakouts. On our price chart, we have an ascending trend line. Remember, for a valid ascending trend line, we use we need three significant swing lows for it to be considered a valid trend line. So in this case, we have definitely more than 3 points on the line. Same goes for our RSI. You can see at the first point, or rather the first area that we've highlighted, RSI broke the ascending support line or trend line before price did. So this forecast that price might break it. So you can see it continues up. Over here, it continues upwards, whereas on our RSI, it has made a lower high. So right after this point, you can see that's exactly what it did. It's barely breaking out of the ascending support line, but shows strong reset bearish divergence against the RSI. Point number 3, RSI breakout plus bearish divergence as well as the price breaking out gives us a high probability that price is going to reverse immediately after this line. You can see that's exactly what it did. It reversed off and it dropped strongly. Okay, next, let's take a look at another example. In this example, we're using an RSI indicator once again. Here we have a descending trend line on our RSI. Over here on our price chart, we don't quite have an ascending trend line, or rather the descending trend line, because as I mentioned earlier, for it to be a valid trend line, we need 3 significant touches, and in this case, we only have 2. So we've highlighted this point here because price is, or rather RSI, is breaking out of this descending trend line or descending resistance. So after this, we're expecting price to shoot up and continue within this ascending trend line. You can see that's exactly what it did here. So price is now testing this trend line and we're wondering if it's going to break out of it. So that's the first point. Second point, we see this descending line breakout or descending trend line breakout of on our RSI chart. And third point, we have a bullish divergence. So remember, for bullish divergence, price is making a lower low, and RSI, or whichever indicator you choose to use, so it can be RSI, MACD, stochastic, whatever oscillator you choose, that indicator will show a higher low. So that is a bullish divergence. And over here we have that. And combining all of these 3 points, it suggests that we could be seeing a very strong reversal on our price chart. Okay, so you can see that's exactly what happened. It reversed off of the swing low and breaks out of our ascending trend line, or rather descending trend line. Okay, let me know if there are any questions so far. Okay, next we'll take a look at some GIFs. So if we're just taking a look at the image that I have here, we have price moving in a decreasing or rather a descending trend channel over here. So price is moving within this descending trend channel and it's making a lower low. And this is on our price chart. Whereas over here, okay, it doesn't show, but I'm using a stochastic indicator here. So on this stochastic indicator, price has made a higher low. So this gives us a bullish divergence. Okay, let me just check the question. Can we take a long position here? Yeah. So I'm just getting to that. So between these 2 points, price has made a lower low on our price chart and it's made a higher low on our RSI. So that in combination with this resistance at the swing high here, that lines up nicely with a 100% Fibonacci projection. So all of that gives us this, or rather it suggests that price is going to break out of our descending trend channel. You can see that's exactly what happened here. So after it breaks out, then we'll go in for a long position, or we're going for a buy from here right up to this level here. And the reason why we stop at this level, or rather we put our take profit at this level, is because of the confluence area. So we have a swing high resistance here, and actually I can pull it back a little bit further to maybe this swing low. And the reason for that is to make it an overlap resistance. Once again, if you were at our support and resistance webinar, you'd know that overlap resistance levels or overlap support levels are where the bulls and the bears are respecting that level, which makes it very significant. So that, in combination with this 100% Fibonacci projection level, make it a really significant confluence area, and you can see how many times price ended up testing that level. So firstly, 2 points here, price breaks out, price reverses, it shoots right up, breaks out of the descending trend channel, and reaches our take profit at this resistance level here. But it's not likely to break out of it because of the confluence area. Okay, I hope that was clear. We can just stop here for a while, so you can watch the GIF a couple of times. Which time frame should you use for high probability? Divergence trading is normally for pretty short-term trades, so it's not really recommended for long-term trading. So you could use it for minutes, or I think maximum maybe the 4-hour chart. I wouldn't go more than 4 hours. Okay. Okay, let's take a look at another bullish divergence example, and then we'll take a look at a couple of charts and see if we can find any divergences there. So in this bullish divergence example, we have price making a lower low. Okay, price has made a lower low, whereas on our stochastic, price has made a higher low. So it's quite a minimal difference. So you might not be able to spot it. So it takes a bit of practice, but if you use these vertical lines, it really helps you to section off the areas and take a look at the differences. So in this case, we don't have any Fibonacci levels that line up with each other. We're just purely looking at the higher lows and the lower lows. But because price has made a lower low, RSI, or stochastic in this case, is giving us a higher low, then we can expect price to shoot up immediately after this second vertical line. You can see on our GIF, that's exactly what happened. You can see how it immediately shoots up after that. So you can use this kind of as a forecast or prediction of whether prices are going to drop or go up. Okay, now let's take a look at some charts, because that's the end of our slides. So let me know in the chat if there are any setups you'd like me to go through, and then we will take a look at some divergences as well in those setups. Okay, maybe to kick things off, we can go ahead and take a look at DXY first, while you guys are letting me know in the chat what you'd like to see. Okay, so first things first, we're going to start off by looking at the higher time frames, just so we have an idea of where prices are headed towards. So now DXY, prices are moving downwards, pretty bearish over here. On our daily time frame, pretty bearish as well, although it does look like there is a reversal here. Let's see if we have a descending trend line. Okay, it looks like price has recently broken out of this descending trend line. So it's giving us a bullish signal here. Okay. Now on our daily time frame, it's also bullish here. Okay. So we have a ascending trend line here. Once again, I'll remind you guys that for a valid trend line, we need 3 touches at least. Okay, now that we have the general direction or trend line, then we can go in with our support and resistance levels. So here it's going to be my first support level. And my first resistance level just here. And here is my second support. Okay, now that we have that, then we'll go in with our Fibonacci levels now. So I'm going to start off by looking at a retracement. So for retracement, we use 5 levels, 23.6, 30.2, 50, 61.8, and 78.6. And I can see that my 23.6 lines up nicely with my second support. Okay, so I'm just going to keep that. Okay, and then I'm looking for another retracement. So my 38.2 lines up with my first support. And my 50% as well lines up with my second support. So these tend to be areas more than levels, so it's fine if it doesn't exactly line up with the level itself. Okay, and the reason why we're doing this is to look for confluence areas, as I mentioned earlier. Okay. Now I'm gonna go in by looking for projection levels. So for projection, we use these 3 levels. Okay. I can see my 61.8 and 100% line up nicely. Okay, just gonna highlight this level because it's quite okay, because we have so many Fibonacci levels lining up at this second support here. Okay, I think that's all the levels that we have. Now let's go in with our indicators. So we like to start off by looking at Ichimoku as well as MACD, because for these 2 indicators at one glance, it tells you exactly what the signals are. Price is moving above the Ichimoku cloud, giving us a bullish signal. Whereas on our MACD, it's kind of giving us a bit of a bearish signal there. Okay, so let's take a look at RSI and see if we can find any signals here. Okay, so as I mentioned earlier, we have a hidden resistance here. So when you're looking at RSI, we can look for a couple of things. Firstly would be for an ascending trend line. Obviously here we don't have a valid ascending trend line since we only have 2 points. Okay, so that's the first thing you can look out for. Next thing would be to look out for divergences. In this case, I was looking between here to here, but you can see price made a higher low and price made a higher low and our RSI also made a higher low. So this is not a divergence. Next, you can look for hidden resistances or supports. In this case, I found a hidden resistance here. Okay, and you can see over here, price actually made, sorry about that. Price actually made a higher high. So this also is considered a divergence. I don't know why that keeps happening. Okay. I'll try to get that sorted out for next webinar, but just bear with me for the time being. So yes, hidden resistance on our RSI. Price made a higher high over here, from here to here. Okay, you want to make sure that you're comparing the tops here. So what does this mean? This could suggest that price is likely to continue to drop since it's reversing off of the first resistance. Okay, and that lines up nicely with our MACD as well, since price is, or rather since MACD is giving us a bearish signal. So we can expect price to continue to drop, or since it's already in the process of dropping from here. Okay, this is my intermediate resistance. From here all the way down to our first support. But we're not likely to see a break out of the first support or even out of this ascending trend line because there is still upward pressure from, as we saw earlier in the previous time frame, the daily time frame, price broke out recently out of the descending trend line. So it's giving us a bullish signal. Here we also have an ascending trend line, so also bullish signal, and also our this area here that I didn't highlight earlier, 38.2 as well as the 61.8, plus this overlap first support is also a confluence area. So we're not likely to see it break out of here, but it is going to continue to drop towards our first support. Okay, and once it drops towards our first support, we can likely see it reverse again. Okay. Any questions so far? Okay. If not, let's take a look at our next chart. Maybe we'll go ahead and take a look at dollar franc. Okay, same thing, we're going to look at the higher time frames first. Okay, we see it dropping significantly on our weekly time frame, on our daily time frame as well. Okay, and we also have this descending trend line. Okay, so it does look like price is going to reverse out of this descending trend line, but this is the daily time frame. So let's take a look at the 4-hour time frame. So earlier we had a question on which time frame would be the best for high probability. So for, as I mentioned earlier, for divergences, they're normally for short-term trading purposes, which is why I said either the minutes or hourly. But I will say also that we normally wouldn't recommend anything less than 15 minutes because there tends to be too much noise and it's quite difficult to trade on those timeframes as well. So we try to keep it between the 30-minute range to maybe about the 4-hour range for divergence trading. Yeah. So in this case, you can see I have been observing or rather taking note of the 1 week and daily timeframes, but we also trade, or rather we do our analysis on the 1 hour and 4-hour timeframes mostly. Okay, here we also have a descending trend line. Next, I'm going to go in with support and resistance levels again. So here's my first resistance and first support here. So for these levels, we just use the closest swing high or swing lows to where price is at and then see how far we can pull it back. Okay. So same thing, I'm going to go in with our Fibonacci levels. I'm looking for a retracement here. Okay. Okay, I can see my 50% lines up with my first resistance. 38.2 is a little bit far from my second support. So I'm just going to count this 50%. Yeah. Okay, next, let's take a look at projection levels. Okay. No projection levels there. Okay, I think that's all the levels that we have over here. Oh, I think we have one more retracement here. Okay, we have a 23.6 and 38.2 that line up nicely as well. Okay, now let's go in with our indicators. And by looking over here, we have a pretty bearish view because of this resistance level here. And also the downward pressure from our trend line. Okay, price is moving above the Ichimoku cloud, giving us a bullish signal. MACD isn't telling us much. Let's see. Okay, it's not telling us much. So it's still ranging, okay, on our MACD. Let's take a look at RSI. Okay, so I see a descending trend line here. Okay, so even though we have this descending trend line, on our price chart, of course, we have our first resistance between these 2 points here. Okay, so this is a sign that price is likely to continue to drop. So I'm going to remove our Ichimoku because it doesn't support our analysis. So price is currently testing our first resistance. It's likely to continue to test it and then reverse off of it and hit towards our first support. Okay, let me know if there are any questions so far. Okay, I want to maybe give you guys another example of a divergence over here. Okay, from here to here. We can see that price has made a lower low here, whereas on our RSI, price has made a higher low. So let me know in the chat if you think this is a bullish divergence or a bearish divergence. Okay, so this is a bullish divergence. Okay, so we'll follow whatever the signal is on the indicator that you're using, RSI, stochastic MACD, whatever it is. So if we play, this is in replay mode, but if we play it, you can see exactly once we've identified that there is a bullish divergence, right after that, price has shot up. Okay, and that's what this movement here is what we are looking for when we make use of divergences. Okay. Okay, I think we have time for maybe one more setup. Maybe we'll go ahead and take a look at gold now. Okay, on our weekly time frame first. Okay, price looks like it's moving downwards. Daily time frame as well, pretty bearish here. Okay, and we have price moving within this descending trend channel. So for descending trend channel, just to recap, we want two tops and two bottoms. Okay. Let's take a look at the 4-hour time frame. Oop. Here we have a very obvious descending trend line. Okay, and we also maybe have a trend channel. Okay, so two tops, two bottoms here, and a descending trend line. Now we're going with our support and resistance levels. Here's my first support. Okay, and this level here is my first resistance. And then second resistance. Just over here. Okay, so all of these levels are purely based on support and resistance, pullback, overlap levels, swing high, swing lows. As you can see, we'll then go in with Fibonacci levels to then move the levels around to more appropriate levels if necessary. So you can see my 38.2 lines up nicely with my second resistance, 23.6 as well. Next, our projection. Okay, we have a 100% that lines up with our first support. Okay, now let's take a look at the indicators. Ichimoku, MACD. Price is moving below the Ichimoku cloud, giving us a bearish signal. MACD is slightly bullish. So this is something that you might encounter quite frequently because there are so many indicators. 50% of them will tell you that it's bullish, 50% will tell you that's bearish. So just pick a few that you are comfortable using and that you are confident in using. And then, yeah, just stick to those indicators. Here we have a trend line, descending trend line as well on our RSI. Okay, I'm also seeing a hidden support level here. Whereas you can see here that price has definitely made lower lows. Okay, so this tells us that price is likely to reach a point where it's going to reverse off of a support level, and that support level could definitely be our first support. But also because we have this trend channel, and it doesn't look like it's gonna break out of the trend channel anytime soon, so we could see it. I'm just going to remove this trend line. So we could see it bounce off as we do see it now. So it's likely to bounce off and continue going within our descending trend channel. Okay, so ultimately still pretty bearish on the gold, but it's as of now, we're likely to see it reverse off and continue upwards within the descending trend channel. Okay, and that's all thanks to this hidden support level here. Okay, let me know if there are any questions. If not, that's all that I have for you guys today. Thank you guys so much for joining me, and I will see you guys next week. Bye! Thank you. Bye, everyone.